hope that you're all doing well, and I hope that you're all keeping safe. And again, as always, I just want to take a moment to appreciate everyone that subscribes to our channel, likes our videos, comments, and so on. Also I don't know why I struggle to say that word, messages us either on Telegram or Instagram, letting us know how you're getting on. I mean, it's really, as I said, as always, it's really humbling to see the message that we get. It's like it's crazy, and the fact that some of you are doing this, well, those of you who are messaging are doing it from, the free content. And as you know, obviously, I'm not sharing everything, but the whole foundation is here, and the fact that you guys are taking so much value from it, it says a lot. But in this video, we're going to talk about swing trading, day trading, scalping, how to do it using the free strategy. Now, the main thing that you need to realize is, as a swing trader, right, if you're a swing trader, there's so many ways to approach it. Now, at Vertex, we don't class ourselves as swing traders, scalpers, or intraday traders. We don't give ourselves a label. The reason why is because, what you class as a swing trader, what you class as a intraday or scalper is completely subjective, right? Because, it's, for example, like if I was, sometimes swing trading can be seen as catching like a crazy amount of pips or holding for a long time. But say you hold like, what was this move? Let me have a look. This move from here to this high, to back to this high, right? It was 253 pips, right? That's a fairly big move, and for me that'd be considered a swing. For some people it wouldn't, okay, considering the time that it took to get there. Like, I mean, it only took what did it take? It only took 3 days to get there, which is somewhat long. But in terms of swing traders, some swing traders essentially they will just place an order, have a really fat stop loss, and then go through drawdown or whatever, okay, until their trade hits either stop loss or TP. And if that works for you, that works for you. But understanding the difference between swing trading and day trading is essentially how you go about utilizing the different time frames. Now, the main thing that you need to know, I don't know why I went to pound yen, but let's stay on this one. So the main thing, right, for let's say long-term plays, you would want to use the 4 hour, I don't know why I did that, 4 hour or above, okay, for your bias. Okay, for short-term plays, okay, short term, which is your intraday, basically, intraday, you want to use hourly. Let's say 4 hour or below. Generally the hourly is the one that you would like to use. So there we go. So I know I got quiet when I'm typing. I struggle to concentrate on both. So that's the main rule of thumb. Now for scalping, however, you can literally use any time frame. For scalping, I would say 15 minutes or below. There we go. But how you approach it is completely down to you. Because, for example, if you wanted to swing trade using order blocks, right, you can simply, and this is more of like a set and forget method. For example, right, so say you choose 4 hour or above, right, then generally the daily will give you a good indication, right? So say, for example, we have this break of structure here, right, this impulsive move, and you know that you've got this daily order block that is sitting there. Now, what some people can do is, shall I talk about this one? Yeah, we'll talk about this one. What some people can do is simply, you can place an order. This is how you can use it as a swing trade. So why is that not getting there? There we go. So you can place an order really just at the open or the 50%, and then have it like that, and then you can just let it go, right? But to me, obviously, for for a 162 pip move, a 2 risk to reward is terrible. I mean, I'm not going to wait that long for a risk to reward of 2. That's just terrible. But essentially you can do that, or you can simply you can use the 50% of this. Does it even get there? It doesn't get there, but obviously it will shorten. But another way you can do it is by marking out your order block and then refining it. Let's look at one that's already been played out. For example, we've got this daily order block that is here, right? And then we can already refine it to this one, but we'll stick to this one for now. If you were going to use this order block, obviously this order block is even bigger than the last one that I showed you, but this order block, you say if you use the 50% of this one, actually, you know what, we'll go through the refinement. In terms of refining to the next candle, the reason why you can do this, even though it's not the last bearish candle before the bullish impulse, the reason why you can is because it's not broken the range. So essentially, you can refine your order block to the next one without even having to go to a lower time frame. I mean, you've just reduced your order block range from, what was it before? It was 146 pips, and you just reduced it to, what, 84 pips. That's huge, like, or pretty much half. But say when you refine it to this one, and then you can get your fib and then use the 50% of this daily order block, right? This is for swing trading. You can simply place the order here, right, at your 50%, place your stop loss just below, and then your target would be the structural high. Okay, for five risk to reward, I mean, it's not terrible, but for me, again, I don't like the fact that you need a 44 pip stop loss to be correct. But if you're going to be a swing trader, and if you say, for example, you're someone who doesn't have the time, that may be the option for you to adopt a set and forget method. For me personally, I used to use a set and forget method, and it was ideal when I was working. To be honest, it worked for me. But yeah, if you're going to use the daily, but then that's essentially how you do it. But remember, your swing trading, the 4 hour above is probably the most ideal time frames to use. So if that's the case, obviously what you have to do is you can refine down to your 4 hour, right? You could probably go even smaller if you want, but it's up to you. But you can use your 4 hour, find the most extreme point, find the clearest order block that stands out for you, and that one is obviously this one here. You can use the open or the 50% stop loss below the low. Again, your target would be the structural daily high that was created, which is here, and already it's gone to a 1 to 9, a 9 to 1, depending on how you say it, a 9 to 1 risk to reward, right? And that's a set and forget method there. Okay, and that took what? It took the space of 3 days. Okay, 3 days to get there using a set and forget method. And this still can be considered a swing, okay, because you're using the higher time frame, and this is your higher time frame bias. However, say for example, if you have a bit more time on your hands, right? If price has moved what? To get from there to there, it's moved 273 pips. So you're going to wait 273 pips to come down to your order block. Now, that's a long time. I mean, from the peak to here, what was it? It took 7 days to get there. Now, a lot of people won't be patient. So what does that mean? Is when you create your range, so when you create the 4 hour range, so now we're going to talk about intraday. Let's just go here, right? For example, when you create the 4 hour range or daily range, okay, so that was a daily high that was created here, okay. Oh, I don't know why it keeps doing that. There we go. So that was a daily range, right? Now, some people aren't overly patient, so what do? You can simply follow structure, right, as we know, and counter trade it. So this can be considered your intraday, sorry. I was trying to get my words out. There we go. So if you're thinking about it from this way, right, what can we see is on the hourly. So as I said, the 4 hour below, and generally the hourly, following the hourly structure will give you probably the most reliable intraday moves, and you could probably get more trades out of it. Unless you want to go lower, it's completely up to you. I mean, you could go down 15 minutes, pretty reliable, but the lower time frame you go, the harder it is to sort of control, to be honest. But yeah, so for intraday, if you're going to counter trade this, most of the time when you're going intraday, you're either going with the trend or against it. If you're going against the trend, you should bear in mind that your target should be fairly what's the word, don't be too ambitious, basically. However, if you're going with the trend, then feel free to take partials and just hold the rest of the trade until you know, you reach your end of your higher time frame range. For example, say if you got a trade in here on the 1 minute, right? You don't need to close it until you reach the end of the range, right? Say for example, you got a 1 minute trade here, right? Should you close a trade, say if you got in a long, right, and you know that price is already bullish. I need to stop saying right. I just remembered I said it so many times there. But say if price is already bullish, okay, or on the higher time frames, if you got a 1 minute time frame entry here, okay, because of that shift in structure, should you close it from the next structure break? No, because you have that full backing of the overall higher time frame bias. So your higher time frame bias should come from the 4 hour and the daily. Okay, so just bear that in mind. Okay, so let's go back to intraday. So what's actually happening here? So we actually created this high that's here. Okay, where was the low that created that high? That high that was created here. Sorry, that high. Apologies, guys. So that high that was created here. Where's the low that created it? We had a low that was here. There we go. So we had a low and then it pulled back. So because it pulled back and then it went up again. Okay. Or for some people, you can consider this a low. It's up to you how you see market structure. How we see market structure at Vertex is a little bit different, but yeah. What can we see here now? On the hourly, we can see that price has formed this range. Okay. We have this nice impulsive move. Where did this impulsive move come from? It came from this order block that is sitting right there. Where did price react? Have a look. So this is how you would do intraday. You will follow the hourly structure basically, or the 4 hour if you want to, but generally the hourly is okay. But you can place your order at the hourly open, have your stop loss just above your order block, or just above that wick. Ideally above that wick would be ideal, and then you can place a trade and either have your target at where you want to buy from on your higher time frame, or aim for the structural points. Now when you aim for the structural points, you can either take partials and then hold the rest of the trade until you get to where you want to buy from. But remember, you don't know if price is going to react at your 4 hour order block, right? Because our 4 hour order block that we want to buy from, right, which is our higher time frame bias, which is here, we don't know if price is going to react there or not. So what do? We can take partials at every structural point, okay, and then hold the rest of the trade, because if price breaks through here, it's going to be a free fall basically, because it's going to be a shift in structure. We will get a pullback, because obviously when you get a okay, if we were to break structure, it will pull back to continue. That will confirm the change in trend, right? So you should expect that pullback to happen. But if it breaks, you know that it can either be a liquidity grab or it could be a change in trend. So if you caught this sell right here, you've caught it before anyone else has even noticed it. So that's why sometimes if you're going to trade against the trend, you know, you can keep a little bit of that position on, because that small amount does add up to a fair bit if you were to hold that all the way through. Because bear in mind, although we know how the markets function, well, we don't exactly know, you know, how it works. We won't exactly know where price will react. This is an order block, right? Price doesn't have to respect it. Price either has to respect it or he has to violate it. Okay, and we don't know which one's going to happen. We don't know that price is going to react at this one. We are just following the confluences and we're following the facts behind it. Okay, in theory, it should react to this order block. Okay, in theory, but it doesn't always have to. So just bear that in mind. So if you're in a trade doing a counter, okay, just be wary be open to holding a small position, just in case. Just in case, you know, you catch a massive swing, for example. But if you're going with the trend, obviously you've got no reason to close. You can continue holding until you get that shift in structure, or until you break your higher time frame range, and then you can consider what's happening in your new range that's forming, whether you want to continue holding or not. But essentially that's how you would continue to take it. Now price obviously did reach, and it went to where you want to buy from and the higher time frame. Now, in terms of scalping, scalping takes a lot of time. Takes a lot of time to practice how to scalp, because scalping is not the easiest. Basically, you just have to follow the structural breaks. But again, how to do it is something that would take a lot of time back testing to actually perfect, because you still need to understand the ranges. And in the last video, what I explained is just go back and try to work out what is happening and why certain ranges have been broken. For example, okay, and most educators, most mentors will show you trades in hindsight, right? Purely because of the ease of it, and most of them are winning trades. But you have to realize that you will lose trades. For example, like we had a structural break here. That structural break created this high. Where did that high come from? It came from this order block that is sitting there. That's where price reacted. Depending on how you place the trade, you probably could have got stopped out unless you gave a bit more room for spread. Okay, but we move on to the next range. Okay, so whether you got stopped out of that on that, I don't know. It depends on how you would have done it. So for me personally, if I did take that trade based on that structure shift, and that is pro trend at the moment, my stop loss would be there. Yeah, I would have been stopped out. So yeah, it depends on how tight and how lenient you want to be with your stop loss, but it's fine. You will take losses, so just bear that in mind. And I've realized that when you're learning, most of the videos that you learn from, they're all based on winning trades. Yes, purely because you have to bear in mind you're still trying to learn a strategy and you want to know that it works. But if no one's showing you the losses, then you're gonna be clouded. Your judgment's gonna be so clouded. Your perception of the strategy is gonna be very clouded, because this strategy does have its losses. In fact, this week I've only taken two trades. One was a break even and one stopped out. Okay, and that's just part of the game. Even last week I ended up in a 1R loss. I've only taken that one trade. I've not been trading as much anyway recently, but purely because I'm not 100%, I'm not feeling great, but that's the main reason why. But what I'm trying to show you is the fact that losses will happen. But am I overly concerned? No. For example, my January was really good, was a really good month. For me to be back at break even, I'll need to lose, I think, around 260 trades, which is just not going to happen. That's just the power of the risk to reward with this strategy, right? What was I talking about? Okay, yeah. So now that you've entered this range, right? We have to wait for this range to break. Now we've broken the range. We're going to create a high. What created this high here? It was this order block here. Then what happened? We created another high. What created this high? It was this order block here. Price reacts. Price breaks that structure. You'll be at break even at this point and could potentially take partials. Now, bear in mind, if you're scalping, you shouldn't expect to have like 1 to 10s, 1 to 5, not 1 to 100s from this move, right? Because bear in mind, if you're going to take this trade, for example, it's going to be a very quick trade. If you're going to scalp, probably best aiming for structure points like that, and your stop loss is going to be where it's going to be just below here. So that's a 1 to 2 or 2 to 1, which obviously for me it's not great. But how long did that take? 45 minutes for 2R. Now, depending on how you want to scalp, obviously these moves, you can get bigger moves. For example, if you were to catch this move, right, and say you use the 50% of this order block. I'm not saying that I would have done this, but say, for example, because I don't have an example to show you at the moment, but say for example you did a 50% of this order block. Okay, you went for a long, you put your stop loss just below, and you accounted for spread. So let's put it a pip below, or let's say 6 pips stop loss, right? And you're going to aim for that structure point. That's a 1 to 6, right? That's how that's your structure point. That's where you're going to aim for. So if you're choosing to scalp, if you're going to decide to trade on lower time frames, have your targets at structural points, take partials and continue going. If you were to carry on going and taking partials on that trade, for example, you could carry on taking partials until you get stopped out. So you could have got a maximum of 15R by taking partials, and then you would have been stopped out at break even. So the main thing you need to understand is what strategy and what approach you want to take and how risky you want to be. That's the main thing. But don't feel like you need to give yourself a category, because you don't have to, right? Because with this strategy, you can utilize it on any time frame basically. So a quick rule of thumb For example, for your higher time frame, for your swing trades, you want to use the daily or the 4 hour. For your intraday, you want to use the hourly or less, or 4 hour or less. Generally, the hourly is probably the best to follow for order flow purposes. And for swing trading, not for swing trading, for scalping, you want to use the 15-minute or less. And the main thing is go back and back test it to try and grasp the concept to the best of your abilities, because without back testing you won't actually understand it and you won't be able to develop your edge. For example, obviously here I've shown you on YouTube that this strategy works. It doesn't mean that you're going to be able to like watch this video. It doesn't mean, say if you're going to follow the swing trading approach, right, it doesn't mean that, okay, oh look, I just found an order block, right? It doesn't mean you could just simply do this. Say you watch this video once and then you do this. Oh look, you found a 4-hour order block. What do? Let's just place the order here. Okay, why? Because Tan said so. Okay, so let's just place the order here and then hold, and a TP is going to be our structural point. Let's do a set and forget. Okay, it's not going to be as simple as that. You are not going to grasp it as simple without that practice. You don't even need to join Vertex to be able to, to be able to gain like this much knowledge, because essentially everything has been handed to you on this YouTube channel, and all you need to do is go away and put the effort in and find out how best to work it. Obviously, if you want to join the mentorship, then obviously you can have access to me and the other 3 mentors, who can answer your questions every day. Any questions that you have, you can ask within the Discord. That's essentially what you're paying for, and also you learn our actual rule-based approach. Because what I've shown you on YouTube is basically what you'll find for free on Smart Money Concepts anywhere. And our approach, I don't think I've not seen it anywhere myself. I'm not saying I've invented it, because it is just a rule-based approach. And I think it's basically a rule-based approach of whatever's already out there, in terms of like Wyckoff or Wyckoff, however you want to say it, in terms of the confluences of momentum, or the order block refinements, everything that we've made that into a 2-rule process on how to actually use this method. But and we've actually redone the course to done it into a part by part video way of teaching, and also a PDF as well that can give you a step-by-step process. You could print that out and have that by your side for every trade. But as I said, if you join the Telegram, there's actually a free PDF using for the free strategy that you can have by your side when you are trading. Now, I hope this video was useful to understand, because this is answering a question that was asked a couple days ago, sorry, about understanding swing trading, intraday trading, and scalping. Essentially, the concepts are all the same. It's just the time frames that you are doing it on. So remember, 4-hour above, swing trading. Intraday is going to be 4-hour or below, and the scalping is going to be 15 minutes or below. And all you have to do is simply backtest as much as you can to be able to adopt whatever style that you wish to do. For me personally, I prefer waiting for the higher time frame bias, then entering using our entry requirements, and then go from there. Simple as that. But for now, I'll leave you guys be. Before I go, I also want to say we do have spaces for our bootcamp should you wish to join it. The discount code is YT500. It'll give you £500 off the bootcamp, which is on the February the 20th to 21st from 10 a.m. GMT on both days. It's a 2-day thing, and then after that you do get access to our Discord and our course. Alternatively, because it is quite pricey, you can join our trade membership, have access to our course, our step-by-step method, have access to myself and the other mentors, have access to our community, and so on. And all the updates that we do are completely free. It's a one-off charge, and anything that we do add in the future, because as we know, for me, I'm always looking for refinements, and I'm always looking to perfect this strategy more than it already is. And as you know, I'm working with several other traders to try and perfect this strategy to a point where we can get the best out of it. Because the only thing that I want to work on is the win rate. The win rate isn't ideal, but obviously when you do win, the wins are pretty solid. So in terms of losses, I'm not overly concerned, but I just want a better strike rate, and that's what I'm working on. That's why I'm working with so many different traders to find a perfect way to trade. Obviously, there's not going to be 100% guarantee way of trading, but I want to find what's closest to that. So anyone that joins our Discord and joins our community will have access to any changes that I make to the strategy, and will get taught how to do it via our Zoom calls as well. But yeah, I think I waffled quite a lot, so I'll leave you guys be, and I hope to see you guys in the community soon. If not, obviously let us know how you're getting on using this free strategy, and also drop us a message on what you would like covered. Obviously bear in mind some topics I cannot cover purely because it's what we teach in our mentorship, and I'm trying to also I'm not going to give out everything that we do at Vertex, but I hope that what we have given is valuable enough, and I know it's valuable enough because I've seen so many great results, and I'll be sharing breakdowns in the near future as well. But for now, take care and trade safe.